Let's start with Evertas. We'll just jump directly to the company and what you guys doing, and we'll continue from there because I'm sure that people really want to understand what's going on with crypto.
Mm-hmm. No, great. Thank you again. I really appreciate the opportunity to speak with you and to the people listening. It is exciting. We share the excitement. We've been working on this since 2017, so for quite a long time. We're solving the problem around insurance for this new emerging asset class of cryptocurrencies. And as we'll discuss, there are a lot of expectations that people have, institutions, retail, average and customers. And there's a real need to, we would say, professionalize a lot of what you see out there in terms of options for crypto assets, custodying crypto assets, for example, where people choose to almost treat some custodians like banks, right? But the reality is they're not really banks. And there's certain different technical areas that need to be addressed if you're a custodian for crypto. And we'll go into some of those things later on. But, solving the issue of insurance is really a discussion and really a journey of the insurance industry. And what I mean by that is, there's a real opportunity in crypto, we believe, to professionalize, and we'll go into that some more as well. And insurance, if you look back at other technologies or innovations, insurance has really been at the forefront oftentimes at improving, whether it's safety or just the overall customer experience around products, around transparency, for example, that it's really needed here. And, for example, some customers, if you look at recent experiences over the last 6 months, they may have expected there to be some type of insurance in place. And oftentimes there's not, or there may not be a lot of clarity on what type of insurance is in place. So when we started, over 5 years ago, we number one had a firm belief that cryptocurrencies, the digital assets that were emerging, were going to become an increasingly prominent and, if not a central feature of economies worldwide. We really believe that, and we believe it today. That being the case, insurance plays a really important role because if you are a custodian, and by the way, another core view we had is that institutions will play an increasing role. Yes, you can self-custody. It's one of the benefits of a decentralized technology. But we felt that over time there would be a desire to have someone else manage, for example, the custody of digital assets. And digital assets are unique in that whoever has the private key really has full control of that asset. It's a digital bearer asset. And so if you have those keys as a custodian, well, if someone takes them, the assets may be inaccessible. You may not be able to get them back. So there's a lot of need for a way to just assess, I would say, the safety, right, of those assets. And so insurance can play an important role as an outside third party to look at how a custodian is managing the custody of those assets. And we've spent years developing an underwriting framework to do that. And we felt that the real key then, and is still the key today, is to underwrite correctly. And what that really means is to understand the risk. So one of the reasons today that it's, the amount of insurance capacity that is companies willing to put balance sheet at risk, it's minuscule compared to the total size of the crypto market. It's single-digit percentages are available, which simply isn't enough for even a crime theft product, for example, or if you want to talk about D&O or tech E&O or cyber, for example, or property or recovery.
So I'm sorry to interrupt you and to stop you here. First of all, I agree with your initial statement that insurance is an important tool as a powering or as a safety net for entrepreneurs, for businesses, for the economy to move forward, because that gives those entrepreneurs the safety net that they need if something happens. So they can reach out. And of course, we are talking about selling your ships across the ocean and bring goods to Venice or to London or wherever it started. Now, can we start, helping people to understand better, Evertas, what type of insurance do you sell? Are you an MGA
Mhm.
carrier?
Yeah.
The small technical stuff that will give us a little bit of perspective. And who is the person? Who is Raymond? And why are we talking about this stuff?
Sure. Great. Thank you. Let me maybe talk about the second piece first, because my journey to being here, I think plays into sort of why insurance, for me, and why in the crypto space. So my early career was actually as a software developer. I was building back office systems for banks, for insurance companies, and later went to more sort of management of the IT domain for banks and financial services companies. So I got to see the back end of how large corporations operate from an IT perspective. I was fortunate enough to start my own management consulting firm for many years that was, again, very technology focused, and really began to see, probably in the early teens, just this interest around blockchain, Bitcoin. And it just piqued my interest, having had not only a software background, but a database background, just piqued my intellectual interest. And so I began to immerse myself. Also met my co-founder at a conference where he was speaking. And we sort of, given my insurance background and given sort of the state of the technology and insurance, he at the time was building up a blockchain practice at a large international custodian. We said, look, this is a real problem. Let's go out and let's go on this adventure together. And who we are as a company, I think, will tell you a lot about how we view not only the issues, but also how to solve them. So we're a bunch of, I would say, crypto natives. Many people on the team, far more than I. For example, we have people who were involved with digital cash in the mid 90s. We have people who have built custody systems. Again, the actual underlying technology to hold assets for people. We have people who've led investigations groups. So one thing we might talk about is claims. We think we actually have put claims handling at the forefront of what we're doing, because we realize that you really need an ability to understand a claim if it happens, for there to be a meaningful sort of insurance contract in place to really provide the coverage you want, the insureds expect.
Mm-hmm.
So our team, crypto native, certainly, we have, I would say, a unique ability to understand and translate the needs of the insureds. We're an MGA, so to your question, we're an MGA, so we work closely with brokers.
Mm-hmm.
It's a challenge because this technology moves so fast. It's a real challenge for brokers to have access to the right education, right, to really have the discussion that they need to have with the insured. So we are spending an increasing amount of time of building up a library of educational material to help brokers. I'll give you one example. Terms that are used a lot in this space are things like hot storage or cold storage or warm storage. Those terms are used a lot, and they're not defined. And we've even seen these terms in policy language, again, not defined. So we've actually, 2 years ago, we defined them. And we define them in, we think, a rigorously defendable way. And it's in our policy language, it's in our form. And we want to bring clarity to what is being insured and what is not. Because we think ultimately that's how you can really demonstrate to an insured the kind of protection and coverage they're getting. So again, crypto native, trying to bring clarity and transparency and the best products to market, working through brokers who see us as a valuable resource to educate the insured, to educate themselves, have access to a world-class underwriting team, to really, the people we bring to these conversations are peers of the insureds, and they really value that because they're not having to spell crypto, for example. You're able to get right to the nuts and bolts, and the insureds recognize that right away.
Mm-hmm.
And I think they appreciate that. And for the brokers, they really appreciate it as well. So for us as an MGA, so a little bit behind the scenes, we're a Lloyd's cover holder. We've been underwriting for, I think, over 4 years. And
Wow.
yeah, and so, we've been doing this, and, we've seen everything and anything, from NFTs to slashing to custody. And we believe we're at the forefront of developing the kind of products that are really needed. And again, coming back to this underwriting point, trying to get carriers more comfortable around the understanding of the risk. And so that's a bit, about us and the team. So again, being an MGA, we work really closely with brokers and their insureds.
What type of policies do you write, and who are your policy holders?
Yeah. So as I mentioned a little bit before, the place where we started was crime, so theft or loss of digital assets, and so we focus on institutions.
Mm-hmm.
So we're not institutions, exchanges, custodians, in some cases larger family offices. But we're not targeting the retail customer. That's not, our underwriting is not designed for that, because we're underwriting complex systems. That's how we're going to market. Who the insureds are is, think, anyone who you would see, like if we were to do a search on crypto, a lot of the custodians who you would notice, again, exchanges, in some cases, even companies. So we've been able to actually, now bring a third-party risk product to the market, which is, we think, phenomenal. And with that, actually, on the first-party side, looking at just companies today who increasingly have digital assets on their balance sheet. It could have come from an acquisition, for example. They then have to custody these products somewhere. They may choose to self-custody, and they are now looking for coverage as well. So the Treasury departments are saying, wait a minute, they're scratching their heads and saying, do we have protection in place? Large funds, for example, are another entity that looks for insurance, because in some cases they're required to have insurance in place. So they're required to make certain warrants or representations around the insurance that's in place. And so, we know of situations where funds could not place funds or their assets at a custodian because there wasn't the proper insurance in place. And that's really, I would say, yes, it's a failure of the insurance world, but it's also, we think, the opportunity.
So how many different products do you have? You mentioned that you started.
Oh, sorry. Yes.
Then
yes,
there is
you.
the technical E&O, which I assume will go to all the different exchanges and the companies that basically the infrastructure of what we see as a crypto of currency. Yeah.
Yeah. No, thank you. Yeah. So we started with crime, so theft and loss. And we did that because that was the most complex and required us to understand the risk. So from there, if you think about other needs the market has, like D&O, for example, we're able to build on that underwriting and provide a crypto-specific D&O product, which is, we think, massively needed in the market today, has been really well received by the brokers and the insureds. We also have a technical E&O product that continues to evolve. What we're looking at there is a technical failure. It could be a software failure or a hardware failure that results in some type of loss or inability to access the assets. So again, crypto specific and designed to solve the very specific problems of the insureds. What we're not doing is we're not taking existing forms that may have been designed in different centuries, let alone decades, that don't contemplate this type of an asset and the specific insurance or risks associated with it. So because our contract has been designed from the ground up to be crypto first, we are in a unique position to really create, we believe, unique products, not only crime, but D&O, E&O. We're developing a cyber product. And, for us, it's just a really exciting time.
Now, I can see that, especially you mentioned the brokers and the education. And I'm just thinking about all the challenges that brokers have, and mainly retail and SMB, about selling cyber insurance and the adjacent cyber security. And I can just imagine the educational gap that they have for cryptocurrency and all the industry that comes with that.
Yeah.
How do you bridge that
And
education gap?
no, it's a great question. And what can be frustrating for the broker is the disproportionate amount of effort perhaps that may have to go into the crypto. If they, for example, are managing a large portfolio of covers for someone, the crypto piece may just take again, a disproportionate amount of effort to
Hmm.
understand, to approach the markets. This is all for us. It's excess and surplus lines here in the States. I should say
Okay.
we're able to write worldwide as being part of Lloyd's.
Yeah.
But it, we have been spending probably now years in conversations like this. I would say in reaching out to brokers, having brokers reach out to us, and spending the half hour, spending the hour to just help them better understand the risk. And I would say not to make them a crypto expert, that's not the goal, but to understand what to look for in the conversation. So some
Hmm.
of the things like, understanding the business model, that's something, a broker is really good at, right? Understanding what is your business. And I can tell you it's funny sometimes when we ask that very basic question, and it's difficult to sometimes interpret the response we get back.
Hmm.
But just understanding the business is key. We're able to give some, I would say, initial questions just to understand what they're looking to insure. I can tell you that NFTs, for example,
Hmm.
almost every type of risk we looked at has a subtle difference, and it usually takes a technical discussion to understand that difference, and that's very difficult for a broker. A broker's not going to be in a good position, I think, to determine that. And I would say it's difficult if you're trying to do what we're doing, which is really understanding the risk and making sure the policy is transparent and clear as to what the risk, what we're trying to risk, what we're trying to insure, what we're not trying to insure. And so what oftentimes happens is the broker will engage us and then let us manage that discussion because it's just more efficient. And then we certainly, as you know, would keep the broker, they're driving the process overall. But end of the day, giving them the information and the insurer the information to determine what is the right coverage, understand the pricing, and help them make a decision.
Very interesting. Listen, the entire crypto world is, I can understand that I'm a technical person, and I'm an insurance person, and I still, and I, there's, for even for me, there are so many things that I need to discover. And I know that I'm not going to be an expert in crypto. And I just trying to imagine how an insurance broker goes into this space and trying to figure out, okay, who is playing against whom and what is the analogy to real life, to
Mm-hmm.
systems and entities that are already familiar. Now,
Yes.
let's, this is a blue ocean. So you're covering specific risks, theft, E&Os, DNO, many for custodians and big players. I haven't seen too many players on the insurance side. There is a Nexus Mutual. I've seen another one, Assure, and there were all kinds of decks that I received that all of them gave me a feeling of that one day they are going to pull the rug or they are going to do a pump and dump. So I
Mm-hmm.
never actually recognize, put more in effort into what they are actually doing. What else is missing from the insurance side?
That's a great question, and just given what you just said, I can tell you we don't have a coin. We don't have any kind of an
Mm-hmm.
offering. So we are in fact really coming to market as a traditional insurance solution, and we think that actually again brings a level of comfort and professionalism. We're not trying to commingle digital assets and digital asset solutions with insurance today. And that at least, we feel that those solutions will evolve. We think there's a spot for them. But, for today, it really is a case of, trying to understand, I would say trying to understand, your example of analogies, I think
Mm-hmm.
it is
Yeah.
important. And, our team, when we're engaging a broker, we do rely a lot on that because the broker has a lot of experience and just, thinking about type of risk, for example, as being somewhat related to like what a bank may in fact have exposure to. And so, for example, one of the products I didn't mention is we do have a fidelity product. So that's actually something that a broker would clearly understand. We then needed to expand our crime product to include not only digital assets but fiat. So, we can sometimes come from the world of fiat and come from the world of financial institutions that they may be familiar with and start working back to, what some of the unique digital, bearer assets could be. But they do find some comfort in starting there, perhaps, like so external theft, right? Fidelity products, D&O, right? And D&O is a great example where we can have a really thoughtful discussion around D&O and then get into the specific crypto aspects. And that also plays to the strengths of our policy, we believe. So look, brokers have a limited time in the day, and we understand that. So we want to give them, enough information to have a meaningful discussion with a potential insured, know when to engage us, and make their lives as efficient as possible.
FTX, they are still in the news. And with the recession, mainly retail investors pulled out their money, or maybe they lost their money in the crypto on Binance, etc., etc. How does it affect you? How do you see this, let's call it, bump in the road of the cryptocurrency and the different exchanges? How did that affect your sales or your longer vision? And of course, this FTX stuff, does it taint the industry and does it affect the insurance? Because you are structured as, let's call it, a classic insurance product.
Yeah, great question. And I'm sure it's on the front of mind of many of the people listening. First, I want to just acknowledge that if you look at the last, let's say, 6-7 months, there were a lot of people who got hurt. These are, real people that have, or I should say, still to be determined, but, there's a lot of anxiety that it caused. And, we've done enough underwriting to have seen a lot of activities where, I don't want to say it was completely a surprise to us, but what I can say, and going back to the beginning part of the conversation, that for us is the opportunity, I would say. And when the events started unfolding kind of summer of last year, and by the way, I would consider this the third crypto winter that myself, my founder, and the rest of the company have experienced. So, every time...
We should talk what was winter number 1 and winter number 2 in a second, but okay.
But every time I think that the industry became, learned valuable lessons, and, has matured. And we think that will be happening here as well. And what I can say is the amount of interest in insurance, and I would say risk mitigation, has been just extensive, since middle of last year. I mean, I think what's happened is directly and indirectly, people are seeing, let's say, failures or potential failures, frozen assets. And it's just that the question that is now coming up is, okay, where is the insurance community? What are the products available? Even startups are recognizing that they perhaps can't ignore some of the basic insurance products that are needed, for example, like D&O or E&O. And then also on the crime side, where it's been a significant acceleration from our side. So our firm has been growing. Not only are we, I would say, crypto natives, we're also digital first. So we've built a scalable infrastructure to allow us to grow our underwriting as the market grows. But overall, I'd say the good or the silver lining is just a heightened awareness of the need to manage and mitigate risk.
So now tell me, what was winter one and winter two?
Hmm. So I'm going back a bit. Winter one was, I would say, 27, 2018. That was mainly just
Ah, okay,
a
okay,
collapse of pricing, the collapse of pricing.
okay.
Um, and then winter two was about 3 years ago. It was, I think it was loosely coupled with sort of the ICO craze. I kind of have to go back. Perhaps I'm just blocking these things out from my memory. Um, but Yeah, I mean, I
I
think you have. Yeah, sorry. I mean, just so you know, early on, I mentioned a bit of my interest. I mean, I ran miners out of my home. I was really, in the hobby, from a crypto mining perspective. And so, you began to see this significant growth in infrastructure, right? So, an industrialization of mining, which I found very interesting to see. And I would say overall, what's a little bit different today is because there is now, I would say, such an increase in almost, I don't want to say institutional, but it's this in, industrialization might be another way of describing it, is people are viewing this as a time to regroup,
mhm.
further improve infrastructure, and to be ready, as sort of the market recovers. And that's been different in the past, I would say. This feels different to me in a good way.
Well, I assume that we are now will be sort of 2009, 2010, because there was the shock in 2008-9, but in 2010, investors were just looking what's the opportunity. Their dry powder was making a hole in their pocket, and they had to deploy that investment. And between the inflation and the recession, yes, that we have, and they're talking about waiting to burn a few $1 trillion in the market, that will need to go back somewhere, and somehow is it going to be, yeah, and this is more retail, right? But there are companies that are waiting for that money to flood again
Mhm.
into their system as blood in any vein of an economic body. And it's going to be interesting to see, do the bodies, the institutions, are they improving their infrastructure for the next leg? So this year or next year, are we going to see like an insane increase in the economy?
Yeah, I don't have a crystal
Oh,
ball,
of
and I would
course not.
probably,
Of course not. No, yeah. I think it's more
and I
of a
would,
rhetorical question.
no, I do, and I like it, but I would tell you, you probably should do the opposite of what I say in some of these discussions. No, I think that what feels different to me is the investors who believe in crypto continue to, and they're looking to expand their investment. So if you think about a lot of the things that we see are very much infrastructure focused. So that
Hmm.
to me is a signal that is where investment is going, because there's a recognition this is a long-term opportunity. And that's exciting for us because we kind of fit into that area. Um, I think you'll continue to see consumer adoption.
Hmm.
This is not a U.S. phenomenon. This is a global phenomenon, and that's also what it's global. It's 24 hours a day. These are all things that make, I think, the market, the opportunity very unique. Coming back to the risk aspect of it, there's also just a lot of opportunities for people to take advantage of people who may not be technically as sophisticated. So for example, one of the things rolling out is a recovery product, tied to our policies. So because of the unique skill sets we have, we want to at least be able to offer people that option. And if you get scammed today, there's very few options
Hmm.
available, or they're very bespoke. And if you're a larger institution and have some type of a loss, again, it's expensive and very bespoke. But we're trying to couple recovery or options around recovery to an insurance policy, to a crime policy, so that again is a way for insurance to provide answers, or partial answers even, in a way that it can't right now. And I think you're also seeing just regulatory discussions.
Yep.
How to make sure that average consumers have some level of protection. Our view is that insurance can play a very important role in that as an objective third party, right? Obviously putting, assets capacity on the line. The regulators may be more aggressive, and again, it's a global phenomenon. So I think you may start seeing jurisdictional differences. You did already in the States versus say, other jurisdictions where some of the events have occurred that you mentioned. So it's difficult to know, but our view is that the cryptocurrency, the digital asset market overall is here to stay. It's
Hmm.
growing. It'll evolve. If we have this conversation a year from now, I hope we do, it'll have grown in ways that perhaps you and I couldn't have imagined. Um, and with that, I think there'll be need for, again, increased understanding of the business models, the risks, how to mitigate those risks, and how insurance can solve some of those problems.
So let's talk about the other side of the risk, which usually it's the claim. You've been
Mhm.
operating for 4 years. What can you share with us? Of course, there are limitations to what you can about the claim process and how you help them to recover.
Yeah, so great question. This is probably not news to many people watching, but there really have not been a lot of claims. And what you will hear about in the news, and one thing I will say is that we've actually built a database of claims, of loss events, I should say,
Hmm.
um, to it influences our underwriting to know what's going on, right? What are the what are the threat vectors? What's going on? Are there jurisdictional, we're trying to understand the risks as best as possible and account for them as best we can in our underwriting and what we look for. But the flip side to all of this is, claims handling. And so one of the things we do up front, and I will get to your claims question, is we also do actual KYC AML of the organizations and the sort of the key members of the organization, because that can be a very strong indicator um, for uh, risk exposure, we believe. So that's sort of done up front. On the claim side, because our policy is really clearly written and articulated, we require certain things. We require things that make our claims handling more efficient. So, for example, we require certain procedures around the handling of transactions or movement, for example, certain types of logs to be maintained. So, for us, we try to drive underwriting efficiency by making sure certain things are being done. And we want those things to be done. So if there is a claim event, we can very quickly determine is it a valid claim?
Hmm.
Because in the end, that's what the insured wants. We, in a growing market, want to make sure that it's providing that risk transfer. And so we have to have the people who understand crypto, who understand the risk, the unique threat vectors. We've done, well, we haven't, from a claim perspective, what we've done oftentimes is we can work to understand what happened. We then have to have through human intelligence, people who've done this before, knowing what to ask and where to look. You then have to have the tools. So there are certain software and analytics packages that we use and have access to and are trained to use to really understand where the aspects may have moved. You then want to understand from a recovery perspective, this oftentimes is tied to jurisdictional issues like where the assets might be. You may have to work with local
Oh,
law
wow.
enforcement
Hmm.
or attorneys. And so, again, there has not been a lot of claim activity in the space. Because of our unique skills, we do get involved independently, and I would say in recovery work, because it's a unique set of skills. You want to have the people who've been doing this for 20 years, who understand the twists and turns that this type of investigation can take. And again, what's unique here is the technology can make things more complicated, and that's where you've got
Yeah,
to have the right people, the right approach, and the right tools.
I can imagine just the headache about, yo, where's the asset? and then you understand what's the jurisdiction, right? Which territory are you on? Is it here? Is it, it
Might be
can
many.
be, the server can be in a few, yeah, exactly. Then I can see underwriters and actuaries going like, how did you even build a model? Where the data from? If it was a challenge for the cyber insurance, how for crypto insurance? Okay, you started with, can we sort of use other models? But you need the data. The biggest challenge is that most of the carriers, when they're dealing with capacity, and we saw that hiccup last year and 2 years ago in cyber, that they were like, okay, we have too much exposure. We don't know. We don't have enough data for cyber, and then there was a lot of questions. There were just recently, I think, who was it from Zurich that mentioned that they are not ready for a cyber catastrophe, and they will try to avoid. And even Lloyd's of London, there were a couple of memorandums last August that talked about challenges that coming from state-related organizations that create all kinds of cyber challenges.
No, that's right.
And from here, it's a question of, okay, great. For you, it's a tabula rasa. It's a clean slate. How did you build the models to satisfy the underwriting? And of course, you have your magic sauce, secret sauce. Sorry.
Yeah. Yeah, well, the magic sauce is a much longer discussion that would probably involve a lot of very tired people at the end. Look, so our underwriting, couple of things about our underwriting. Being digital first in terms of how we built our own underwriting platform, and we had to because we knew that we could not treat all risks the same. This wasn't an auto or a home product. To a retail customer. We're talking about institutions, some of whom may be very large, very complex, some might be very small, rather straightforward. So we do not have a one size fits all underwriting. What we're able to do is upfront through an automated sort of set of collection of data, determine an underwriting path that sort of varies in complexity. And with that complexity, we adjust the questions we ask you. We're not going to ask the same amount of questions to a small family office as you would to a multi-billion-dollar global custodian. But the real secret sauce from an underwriting perspective, I would argue, beyond that, is we define the target answers to allow us to be more efficient in our underwriting. So as I said, depending on the type of entity you are, we've said that the response, our target response might differ. So we can use a level of automation that given my background in insurance, what I've seen in back office systems, it's really unheard of. And that allows our underwriting to be really more efficient. It's something we're continuing to evolve and build on, but that's one piece of our secret sauce. That's more of an implementation item, I would say. The real content, so I think it's 22 categories now. The questions that get asked depending on the type of custody system you have. These are all things that we spent years building, looking at loss events, using the fact that we've had people doing this for 20, 30 years or built these systems. You can't replace that. And it's taken us the time to know the questions, know the responses. There's also a big important element here around usability of an underwriting form, right? You have to make this digestible and usable to the insured. So we've done a lot of things to make it the underwriting experience as efficient as possible. Look, this is not an auto policy. I'll say that again. So there is work, but we're trying to really, I would say, push the frontier of underwriting and innovation around underwriting. And this is a moving target. So we are continually, based on our market research, knowledge of the threat vectors, discussions with insureds, we're constantly going back and making sure our underwriting it changes where it needs to. And that I think will be the case for a significant amount of time to come.
Yeah. Okay, so sadly, we are reaching the end of this episode because, and after all, you're a very busy person, so I really want to be very conscious with your time. And I would love to get your thoughts about where the cryptocurrency or crypto assets insurance industry is going. You don't, at this point, you don't have too many competitors. So there are not too many services or insurance products. So what are we missing, and how and who do we need, to enter to support it and move the entire, I will call it not niche, but segment forward?
Yeah. Of course, I'll start by saying work with your broker and contact us.
Of
So
course,
certainly
yeah.
talk to us to help. Um, Look, we're focused exclusively on the digital asset space, on the crypto space.
Hmm.
There's no one else doing that today. Um, so that puts us in a unique position. We also have a great partner with Lloyd's. Again, puts us in a really great position. I think where the market is going to have to go is brokers will have to become familiar enough with the risk to really understand what products are needed, what coverages are needed, and where those are available in the market. If you talk to any broker who's dealing with crypto related companies, it's it is a very difficult risk. Very few markets, difficult to understand, and I think brokers will have to sort of educate themselves more. Um, and we're certainly working with people to do that. So we're kind of building out the training material for it. Um,
So
what's
what needs
exciting
to,
to me,
oh, sorry.
sorry,
Please go ahead.
no, what's exciting to me is what I alluded to before, is that the space is moving so quickly. In 12 months from now, I'm sure we'll be talking about different innovation around blockchain or cryptocurrencies, digital currencies, things we didn't anticipate. And so you mentioned cyber. I mean, cyber became I would argue, a very constrained product as it evolved, which, you could argue filled a certain need or perceived need, but it no longer is sort of filling the requirements. It's falling short in many ways, and the insurers, the carriers, if you as you mentioned, are having difficulty, and you even have governments talking about being some type of a backstop for a cyber type of insurance product, which
Hmm.
certainly didn't hear about a couple of years ago. Um, so I would say certainly keep your eyes out on regulation. That will drive, I think, potentially the insurance discussions. It'll vary by jurisdiction, so recognize that digital assets are global by nature.
Hmm.
Um, and it's really important, if you're talking to an insurer, to understand the business, understand what are the crypto assets, the crypto related risks, and reach out to people like us, to Evertas, to help you in those conversations.
Now, what do you think needs to happen to support retail? Because I know you're
Hmm.
providing products for commercial, for the family offices, for the custodians, for the exchanges. What needs to happen so there will be insurance that makes sense for retail? The only thing that I've seen so far close to that was, I think it's Assurance with an AC, that they are only on Telegram, and what they are doing is ensuring the transaction. So as you make the transaction, whatever zero point zero 0.01 ETH or whatever that may be, that they are taking for themselves to ensure that it's actually
Yeah,
exchanged.
yeah. There are a couple of products like that who have, I would say, in some cases, even a technology solution um, sort of aspect to them.
Mm-hmm.
Um, in particular, looking at sort of the management of multi-signature implementations. But more broadly speaking, we actually, in the spirit of education, as I mentioned before, we actually we call it a platform product. So we want an institution to be able to offer coverage to their customers. So, for example, if you're a custodian, we would do the underwriting. You would have a policy, and you could perhaps treat that policy as enabling some type of minimum insurance to some dollar amount or Bitcoin amount to your customers. So that may, it could be potentially be a valid, it could be a marketing tool, or it could be a valid signal that you've done the work to have your systems, your operations, your technology looked at by an outside third party to even offer that. But once the underwriting is done, you then have the ability to allow end customers to purchase more insurance. And so we've seen a lot of interest there. I think people do want to protect themselves. And even if an institution offers some minimal protection, we think, excuse me, offering those customers an ability to purchase more is a valid option that you don't see a lot in the market today. We think that's an innovation that this market needs.
Raymond, thank you very, very much for your time today. It was a pleasure talking with you. I'm sure that we can continue talking about, because from time to time you throw in a little bit of a technical element that I really want you to go like, oh, can you explain it? And can we do a deep dive only about that and more, expose more of what's going on? Because the crypto, the digital assets and the cryptocurrency, and I've no idea if Meta, that will happen. And I'm sure that there is so many digital assets that will need to be insured on Mark Zuckerberg's vision for the world. But okay, that's for now. Yes, otherwise I will keep on going. Okay.
No, look, I really want to thank you for the opportunity to speak and to reach out to your audience. I will say we could have spent hours on any particular technical item. I think what I found in having discussions like this, especially with more of an insurance audience, that it's really just trying to make it approachable. That's oftentimes the most helpful. Mm-hmm. And then if someone really has an interest to pursue or understand a technical issue more, there are great resources available online. We are available to speak as well. We can go into some of the technical points if people find it interesting. But I think that this was a really great conversation. I want to thank you for the opportunity.
Thank you.